Imagine opening your banking app. You made your payment. Your balance went down. Everything looks fine. Then next month, the balance is back. A few months later, it's even higher than before. You didn't suddenly become irresponsible, and you didn't forget how math works. So why does escaping debt feel almost impossible? Because for many companies, your debt isn't a problem. It's their business model. The longer you stay in debt, the more money they make. And once you understand how this system works, you'll never look at debt the same way again. Most people think banks make money by lending you money once, but that's only part of the story. The real profits come afterward. Think about it. If someone borrows $5,000 and pays it back next month, the bank earns very little. But if that same person spends years making minimum payments, interest keeps flowing month after month. Late fees appear. Interest compounds. New purchases get added. The customer keeps paying without ever truly escaping. In other words, the ideal customer isn't someone who pays quickly. It's someone who stays in debt for as long as possible. Take a look at almost any credit card statement. You'll always find something called the minimum payment. It feels helpful, affordable, even reassuring. But here's what most people don't realize. That minimum payment often barely reduces the amount you actually owe. Most of your payment goes toward interest first, while only a small portion reduces the original balance. Then next month, interest starts building again. It feels like you're making progress, but financially you're barely moving. It's like running on a treadmill, working hard without getting anywhere. Debt doesn't just trap your wallet. It traps your mind. Small monthly payments rarely feel painful. A $40 payment, a $60 payment, a $90 payment. Individually, they don't seem dangerous. But together, they quietly consume hundreds of dollars every month. Humans naturally focus on monthly payments instead of total cost. That's exactly why stores advertise only $29 a month instead of $1,700 total. The monthly number feels small, and your brain immediately thinks, I can afford that, even when the total cost is far higher than you realize. Companies understand this psychology extremely well because people don't buy prices, they buy payments. Have you noticed that almost everything can be financed now? Phones, cars, furniture, appliances. Instead of saving first, people borrow first. Then before the loan is even finished, a newer version appears. A better phone, a newer car, a larger television, another upgrade, another monthly payment. The cycle never ends. You're constantly paying without ever truly owning your financial future. Debt slowly becomes normal. Not because people enjoy debt, but because the entire system makes borrowing feel easier than waiting. Now ask yourself one question. If everyone fully understood interest, compound debt, and budgeting, would companies make more money? Probably not. An educated customer pays off debt faster, borrows less often, and spends more carefully. That's great for individuals, but not always for businesses built around lending money. This is why financial education often receives far less attention than advertising. Companies spend billions teaching people how to buy. Very few spend money teaching people when not to buy. There's another reason debt has become so powerful. It creates predictable income. Every month, millions of people make interest payments, and those payments become reliable revenue for lenders. The system doesn't need everyone to fail. It only needs enough people to keep carrying balances month after month. That's why credit limits increase when you've been making payments. That's why you're constantly offered new financing options. The easier it is to borrow, the longer the cycle can continue. Debt itself isn't evil. Used wisely, it can help people build businesses, buy homes, or create opportunities. But consumer debt becomes dangerous when it quietly turns into a permanent lifestyle. The goal isn't to never borrow. The goal is to own your debt before your debt owns you. Because every dollar you stop paying in unnecessary interest becomes another dollar working toward your future instead of someone else's profits. And that's the difference between financing someone else's wealth and building your own.